All right, let's do this stock market update here. Stock market crash looks awful out there. Stocks are just absolutely in the sewer. A couple bright spots maybe that we can point to. I'll get to that in a little bit. We're going to go through the S&P 500. We're going to go back and review some of the levels that I talked about in the last week's update. We're going to go through some stocks, what we can be looking for, talking about oil. We're going to get through all this. Let's talk about the S&P 500, okay? We came into the week, talked about this level right here, this red line. It goes all the way back to some key support here from 2015 onward. Said it needed to hold that. If that didn't hold, guess what? The December lows from 2018 were going to be in play. I said 2346 was critical. We have to defend that level. We didn't. We broke right through it today. That's not a good look, man, because there's not a lot of support underneath. Either this market finds its own new support level or we're going much, much lower. When I zoom out, you don't even see any support underneath. That's your other problem. I mean, maybe you have some at 2140. It's not real clear. It's not real definable. It's possible, but this 1800 level starts to loom very, very large here. Maybe not next week, but in the weeks to come, if there's not a handle put on this coronavirus, man, and it's spread. Here's the problem, though. The market's going down because, not because so much of the virus itself, but we're shutting down the entire world economy. We got politicians, and I'm not trying to get political here, so I'm not going to name parties. It's really everybody. We're panicking. We're killing all the businesses. We're keeping the stock market open when we don't have businesses open. Maybe we should shut down the stock market. I don't even think that's a good answer. But my goodness, I mean, running a stock market with zero earnings coming in, probably not a good idea either. How low does this market go? It depends on how long this market stays shut down. I mean, you can't afford to put this thing on hold for 2-3 months. I know the politicians, they kind of like live in a fantasy world where they think that the economy can just stay put. And, oh, we'll just open it back up and everything will be fine. No, because there'll be jobs lost. There'll be wages gone. People won't be able to afford services that they used to beforehand. There's some drastic consequences here. Again, let's go back and look at some long-term scenarios here. If we keep falling apart, this 1600 level, 1580s, becomes very realistic. Very possible. I don't want it to be, man. Look, quick update on me. How did I do in the stock market? I bought Apple, I bought AMD, I bought SH. Profitable on 2 out of the 3. I'll go over those real quick. Apple, I tried to play this bounce yesterday. It was my first trade yesterday was Apple. I got in, rallied a little bit. I got in at 250, didn't quite work out. I got quickly out towards the end of the day. Not going to hold it overnight if I can't get a little bit of momentum together. AMD was the second trade. So on the first trade, Apple, I lost 0.6%. On AMD, I made 2.3%. On AMD, I got in at 39.68 yesterday. It went up a little bit. I got out at 40.60, made 2.3. Here's a chart on SH. See this little continuation triangle pattern? It's when you have a triangle pattern on the chart that's about at under a third of the size of the previous rally. That we definitely have that and more here. I said to myself, if it breaks out of the triangle pattern, I'm going to get long on SH. Okay, that corresponds with SPY. To the downside, it had that same triangle pattern. It broke down. I wrote it. I made about 1.6% on the trade. Overall, I was up on the week. But yes, I don't want to be a doomsdayer, and I hope it doesn't happen. I think the market is due for a temporary bounce of some kind. Whether or not that bounce can be sustained in the days ahead, I'm not sure. But I'm 100% going into Monday. The Mondays have sucked for the last, few weeks now. We had a limit down within 15 minutes after the futures opened, and that was after the Fed cut short-term interest rates down to 0%. You can't get behind a market that cannot rally and has too much high risk going into these weekends. Let's take a look at some of these sector charts here. Nothing is being spared. Energy, these are lows that haven't been seen since the early 2000s, guys. We're talking about 2003, 2004. Discretionary, massive topping pattern there. Broke key support from the December 2018 lows early on in the week. It's in a free fall. Technology also in a free fall, holding up a little bit better because we got this 200-week moving average that it's consistently bounced off of in the past, going back to 2010. It did break below it early on. Maybe a sliver of hope, okay? The other thing that I would say about the S&P 500, we were down over 4% today. One of the few days that I've not seen just some really drastic breadth in the market. Breadth is what I mean by how many stocks are going down versus how many are actually going up. Earlier this week, I saw readings as much as like 25, 26 to 1. That means for every stock that was going up, 26 of them were going down. Today, it was a much tighter grouping. I've never even seen this before. Stocks were down 4%. You had 13 stocks going up for every 17 going down. That means you were close to 1 to 1. 1 to 1, and you had almost 1,000 points down on the Dow. over 100 points on the S&P. Is it a silver lining? Maybe. Sometimes I look for these divergences because I'm trying to look for the clues of when this market may finally put a bottom in. But going back to these sectors here, you have healthcare, complete free fall again. Seeing levels going back to 2017. Financials the same. Financials is one of the worst sectors right now. We're hitting 2016 level. Real estate, this scares me. I mean, what is real estate telling us here? What is the real estate telling us about the housing market? Are we looking at a potential recession here too in the housing market? Nobody's talking about it. But real estate's been one of the worst sectors over the last month. This thing is falling apart. It's down almost 50% at one point this week from its all-time highs. There's not a lot of other sectors that have been hit as hard as real estate. Basic materials, the same thing. Consumer staples holding up a little bit better because a lot of money will go into your Walmarts, your Costco's, and stocks like that during a bad time because people are afraid and they're trying to put their money somewhere that's not going to get as hard. But I say that, and then you look at utilities. Utilities is in free fall. It's been one of the better growth plays, surprisingly, over the last couple of years, but this one's taken its hits too. Take a look at industrials, just eyeballing the chart. That's about 40% decline or so, give or take a few percentage points. You got companies like Boeing that are just in a complete free fall, hitting as highs of like 446 last year. Now we're talking about sub 100 prices. Now I talked about silver linings before. There is one little silver lining in the VIX. Typically, when the markets go way down, like you did today, where the S&P 500 was down over 100 points, the VIX is going to go up because the volatility, the fear is increasing. Today was not the case. Just like with the breadth, the VIX was showing more of a contraction, and you had an 8% decline on the VIX when you would have kind of thought the thing might have been up another 15-20%. Instead, it was down 8%. Now, what stocks are holding up pretty good? Chlorox took a big hit today, at 7.5%, but you can see it's actually hitting all-time highs this week. It's doing pretty good. Overall, you got to remember, a lot of these stocks that are doing good when the market's doing bad, they're going to go bad when the market does good because people will be selling out of those and trying to get into more of your bargain plays like Apple, Amazon, Google, Facebook, Netflix, the works. Another one to be watching is Zoom. It's not to be confused with ZOOM stock price because a lot of people are doing that, but instead it's just ZM. This one continues to march higher. It's impressive. All-time highs again today. Be careful though, because at some point it's going to be like this SPCE chart where the people get so hyped about buying it, and then when it hits its peak, it's going to fall apart. When people start going back to work, ZM's probably going to take a hit at that point in time because they won't be relied on as much for their technology as they were before. You also have Kroger. Continues to push higher. It had a bad day today, just like Walmart did. However, these stocks are hitting all-time highs during one of the worst disasters this market has ever seen before. Now, I'm not saying that you should go buy these stocks, but there are stocks that do kind of rally in these kinds of markets. These four stocks I just talked about are prime examples of such. Going back to the S&P 500, I want to highlight one more time frame on this chart that gives you a little bit more of a short-term look at when things might start to turn around. If you go back to the 4th of this month, March 4th, we started this downtrend that has held up basically to a T since. And guess what? It has yet to break over it. It's tested it multiple times, but it cannot break through. It has multiple tests here. It has another test there, another test there, and another test here. None of those times has it been able to break through. Until that happens, you can't get optimistic about any kind of bounce in this market. It needs to break through this line, and once it does, then you have a possibility of a dead cat bounce at the very least. Hopefully it's a bottom in the market. Now, what are the potential bargains in this market right now? Let's start with the leader, Apple. I talked about before, it's like this 240 level might be like a dream case scenario. It broke right through it this week. It gave no concern about it. In fact, it didn't confirm it until today. But when it did, it broke right through. Where's the next level at? Dare I say this thing could be testing a trend line going all the way back to 2013. If that's the case, there's the possibility you could see a potential buying opportunity at 180. I don't know if we get there. I hope we don't, quite honestly. I mean, we get there, there's going to be a lot worse things happening in the economy as a result. Going back to Tesla, this big yellow line here, I said if that one was to test and hold, that might be a good buying opportunity. It did hold it this week. However, that candle today is not a good candle. It did see a bounce though. It went from 365 all the way up 473 or so. However, if this market continues to go south, I have very little confidence this support level will hold. So if you're looking for buys, yes, Tesla may be a buy at these levels. I'm not sure. It's going to depend on what the market does next week and the week after. But there's so many other more reliable stocks. You got Apple, you got Google, you have Visa, you have a lot of good companies out there already selling at discount. Personally, I wouldn't be jumping into Tesla because I think there's a lot better opportunities out there. Let's look at some of these cruise liners. I mean, these things have just been getting decimated. I was trading RCL back when it was in the 130s. I got out in the 130s back in late January. I didn't know this was going to happen. I was just following my stop losses. That's why I preach risk management. I don't know what my stop losses are going to eventually keep me out of. It kept me out of a disaster right here. This thing is in the 20s now. People are getting interested. It's like, hey, should I buy some of these cruise lines? I don't know, because guess what? It goes from $23, $24 a share where it's at right now. It goes back down and tests its lows at 19. You're down over 20% on your trade. Might not be worth it at this point. Take a look at Delta Airlines. Down to 21 from 60. You can get in at these low prices, but that doesn't mean that you can't take massive hits either. You don't have to get in at the bottom. Everybody thinks that you got to get in at the lowest tick possible. You don't. You can let these things rebound a little bit and then get in. This thing will have buying opportunities for a long time after it does bottom, but you got to be patient. Taking a look at Netflix. Nice little trend line here. It's been broken. It tried to recapture it today, fell apart. Now there's a good chance this thing's going to go back down into the 290s if we don't get a bounce next week. Very good chance. One stock that I am going to be paying very close attention to is Visa, because look at this long-term trend line. It's testing it. It is really trying to hold it here, guys. I don't know if it will, but if it can hold, the market wants to start rallying beginning next week. Again, big mystery there. If that happens, there's the potential opportunity for us to get a pretty good sizable bounce off of that and then get in at a really good price. That's my hope, at least. Others include Nvidia. It needs to hold this rising trend line off of the June lows. If that doesn't happen, there's a potential for it to retest this trend line back in the 150s. It's a huge sell-off at that point, but it's another 25% lower. If the market goes down to 1800 or even probably 2000, this thing is probably going to see a $150 price print or something close to it. Another crowd favorite is AMD. Look at the trend line off of the 2016 lows. I never would imagine this thing could have held up this well, but it has. And it continues to hold it going forward. It's testing it right now. It's off, about 33% from its all-time highs. That's in line with the market. I thought it would probably be more at this point, but it's still holding its 200-day moving average. So that's another positive. Holding this trend line. Again, this is one to be targeting. I tried to get into it yesterday. I only made a little bit. I made about 2.3% off of it. However, I do think the opportunity still exists for it going forward. Here's the thing about what you need to know going forward. Let price confirm for you. Don't try to be the hero in the stock market. Don't try to be the person who gets in at the very bottom or gets a better price than everyone else, because your capital is likely to pay for it, okay? You're likely to lose money with that kind of approach, that kind of attitude. You don't have to be the first one in. You want the chunk in the middle. That's what you're aiming for. You don't need the bottom eighth of the rally, and you don't need the top eighth of the rally. You want something right there in the middle. This is not your typical bear market. 2018 was like a typical bear market. Stuff that you saw in 2010, bear market kind of stuff. This is a collapse. At some point it will find a bottom. I hope it's sooner rather than later. But what you don't want is to be on the front lines taking all the bullets for everybody else. You don't have to be that person in the stock market. It doesn't require you to be a hero. Your first priority when it comes to trading is to preserve capital at all costs. You manage the risk, the profits will always take care of themselves. That's what it always is about. Most people just think about the profits, all the money that's going to be made. No, it's about managing the risk. If you don't manage the risk, you don't have a chance. Guys, this is one of the craziest, if not the craziest market you'll ever see. This is in line with like 1929 kind of price action, if not worse in terms of the first month or so of it, okay? You've got to be diligent. You've got to plan out your trades before you ever get in them. Know where you're going to get out before you ever get in. If the stock goes wrong, and you should always assume that it will, know where you're going to get out. It's the best thing I can tell you. It's what's guided me. It's what's kept me in the game over the years. You got to do the same.